Beginner's Guide to the Stock Market. The stock market might seem confusing at first, but it's essentially a place where people buy and sell pieces of ownership in companies, called stocks or shares. Let's break it down in the simplest way possible. 1. What is the stock market? Imagine a big marketplace where people trade pieces of companies. When you buy a stock, you're buying a small ownership stake in a company. If the company does well, the value of your stock may go up. If it doesn't, the value may go down. 2. Why do companies sell stocks? Companies sell stocks to raise money to grow their business. In exchange, they give investors, you, a piece of ownership in the company. 3. Why do people invest in stocks? To make money. If the stock price goes up, you can sell it for a profit. Some companies also pay dividends, which are regular payments to shareholders. To build wealth over time. Historically, the stock market has grown in value over the long term. 4. How does it work? Stocks are traded on platforms called stock exchanges, like the New York Stock Exchange or NASDAQ. You can buy or sell stocks through a broker, which is like a middleman. 5. What affects stock prices? Company performance. If a company is doing well, profits increasing, its stock price often goes up. News and trends. Big events, like a product launch or scandal, can impact stock prices. Supply and demand. If many people want a stock, its price goes up. If fewer people want it, the price goes down. 6. Risks and rewards. Rewards. Stocks can grow your money faster than other investments, like savings accounts. Risks. Stocks can lose value, especially in the short term. The market goes up and down, so patience is key. 7. Steps to start investing. 1. Learn the basics. Understand key terms like stocks, bonds, dividends, and risk. 2. Open a brokerage account. Use an online platform like Robinhood, Vanguard, or eToro. 3. Start small. Begin with a small amount of money you're comfortable risking. 4. Diversify. Don't put all your money into one stock. Spread it across different companies or industries. 5. Be patient. The stock market is a long-term game. 8. Example of a stock, Apple Inc. If you buy one share of Apple, you own a small part of the company. If Apple announces a new iPhone and sales skyrocket, its stock price might go up, and you could sell your share for a profit. 9. Key terms to know. Stock. Ownership in a company. Shares. Units of stock. Dividend. Regular payments from a company to its shareholders. Portfolio. The collection of stocks and investments you own. Bull market. When the stock market is going up. Bear market. When the stock market is going down. 10. Golden rule: only invest money you can afford to lose, and always do your research before buying a stock.